Well, it's all about individual stocks, and that's what's driving the market. So let's bring it down to the top 10 list that you need to watch out for today. Our team is standing by with exactly that. Guys, good morning to all of you. And topping the charts is going to be what else but Vodafone Idea along with Indus Towers, because finally we have those big announcements from the board meet yesterday. Nisha, tell us more.
That's right. It's a large fundraise exercise that the board of Vodafone Idea has really approved, worth 20,000 crore rupees. And that will also give them the ability to raise more debt. So in total, they are looking at about 45,000 through debt and equity, as well as the promoter entities are likely to participate, is what they have stated. And the EGM for getting the shareholders' approval is on April 2nd. They aim to complete this particular process by the first quarter of FY25 is what is stated, and the money is required for network expansion, more coverage for 4G and 5G rollout. Here I will add one more point, is that they have government dues on account of AGR as well as spectrum liabilities. So it will give them more amount of money to and ability to repay that debt. Now, most of the brokerages have said that it is a more definitive plan, even though it's an enabling resolution of raising equity funding like they had done in September 2020, but could not bring in external investors. So some of the brokerages are skeptical and would be watching out for it. One more aspect which is going to be important is that the market as well as the analysts do state that while this fundraising is going to cause a turnaround in the company's prospects, but a tariff hike in the telecom sector is very much required. Of course, a direct beneficiary of the fundraising exercise of Vodafone Idea is going to be Indus Towers, and it will manage to get the outstanding dues from Vodafone Idea, and it has also reduced exposure to Vodafone Idea, so an upside to that cannot be ruled out as well.
Okay, all right. Thanks a lot for that, Nisha. Well, I'm tracking Vedanta. They had an analyst meet yesterday, and the team has, pressed all the right buttons and spoken all the right things. Let's see if they deliver. That's going to be important. But for the time being, I'll read this positively. The few big highlights that they said, management says that they have a potential to deliver $7.5 billion of EBITDA annually because of the expansions that are underway. They also highlighted that the expansion of the aluminium and the zinc assets, which were underway, that will be completed in FY25 and they'll start contributing. Nuvama, in their note, they say that both these two assets can contribute in addition $1 billion of cash flow. So we'll see how that goes. On debt, they said that they're going to be reducing debt at the parent, that's Vedanta Resources, by $3 billion by 2027. And they have stated various ways they can do that. There's a brand fee in there that they can do it. Could be possibility of some dividend payout as well. And they're saying that more or less, they believe that this is very doable. The important point is, forget about what's happening at Vedanta Resources. For the listed entity, they said no further debt will come on its books, which is positive. And one step in the right direction will be the monetization of the steel assets. Earlier, they were talking about Q4 FY24. Now they're talking about Q1 FY25. So we'll have to track that. And finally, in FY25, we'll have many more listed entities from the Vedanta group. So that could be a value unlocking exercise as well. Expect the stock to open up in the green.
Okay, so making all the right noises.
Making the right noises. Now, delivery is important. Delivery is very, very important. And, let's see if they can keep up to this.
Deliver on the promises.
The problem at the parent level seems to be going away. And that, in turn, could result in a little better valuation for it. For currently, it trades at less than 4 times EV per EBITDA.
I think I've seen a few upgrades.
Yes, we'll do that at around 9 a.m. today.
Absolutely. So. But I mean, the price target doesn't move that much, 10, 20, 15 rupees. But more on that a little later. Now, Bharti is the other one in focus. We spoke about Vodafone Idea, but Hormuz has got more on Bharti. Hormuz, take it away.
Well, Sunil Bharti Mittal spoke to Mint at the Mobile World Congress, and he's delivered some positive commentary coming in there as well. And he's seeing this trend among companies where they are trying to focus on their core businesses now, and that's what Sunil Bharti Mittal has said as well. And he mentioned that they plan to exit the non-core businesses like insurance, food, skilling that have failed to scale up and concentrate on their core business. What is their priority now? The priority is to transform Airtel into a digital entity, the focus on its Africa operations, which has a significant contribution to its EBITDA, and focus on the payments bank as well. And he's also mentioned that another area of priority will be the focus on OneWeb Satellites broadband venture. So that those are the area of focuses. And he's also spoken about the enterprise vertical in that interview, and he's mentioned that the potential value of the enterprise segment is close to $10 billion. And he also spoke of competition coming in from Elon Musk and Starlink, and he's called Starlink a formidable competition, and as a result he sought immediate spectrum allocation for the same. same. So positive commentary coming in from Sunil Bharti Mittal there. Expect the stock to open in mildly in the green.
Okay, got that. Hormaz will watch out for Bharti as well. Let's move on to a couple of the stocks beyond the Nifty, which Vivek is watching out for. Torrent Power and Salazar Techno. Vivek, why are you looking at these?
Well, good morning. Some news flow coming in both of these names. So first we look at Torrent Power. What's happened is that the company has got the letter of intent. The company has won a bid under the tariff-based cooperative bidding process. This particular bid has been won from PFC Consultant. This set up a transmission system in the state of Maharashtra. Now, what are the details? The annual transmission charge of close to 50 crore. Apart from that, 24 months is when they'll start operations. And this particular timeline is for a period of 35 years. So positive development as far as Torrent Power is concerned. The second stock is Salazar Techno. The stock's been quite volatile. The company has received an order worth 200 crore. Now, this is from an entity known as Zetwork. The company would be supplying close to 25,000 metric ton of solar structures, which then the buying entity will subsequently export. So some positive news flow coming in for Salazar as well.
All right. Vivek, thank you very much for that. Well, Abhishek is now with us with sort of news and updates on Capital SFB and the CMS Info, where there was, of course, that clean out block which happened. Abhishek, take it away.
Well, to begin with Capital SFB, they have reported their Q3 FY24 numbers, and numbers are on the weaker side. If you take a look at the asset quality as well as the AUM book. So to begin with asset quality, gross NPA in value-wise is up 6% quarter-on-quarter. As a ratio, it's up 24 basis point on a sequential basis. Deposit momentum is strong, up about 11.5% YOY and about close to 7% sequentially. However, the AUM has dipped, and that is a surprising factor given the fact that all the lenders have seen their loan book growth this quarter. So the AUM growth is a decline of 2.5% on a sequential basis, while it has grown by 12.4% on a YOY basis. In terms of net interest income, it's grown at 3.5% sequentially. This is due to the fact that they have been able to control their cost of funds and improve their yield in this quarter. So their AUM has actually declined by 2.5%, but their interest income is up 3.5%. So that's also aided the NII. And the PAT is aided by the fact that, there is a decline in provisions and robust growth in other income as well. So PAT growth is nearly 19% on a sequential basis. Coming on to CMS Info, there was a block deal as we had reported that the promoter entity or SAN Investment Holding will be selling their entire stake of 26.7%. Some of the key, participants in this block deal were Society General, AIG Global Investment, Morgan Stanley Asia, Singapore PTE, ICICI Pru MF, Abu Dhabi Investment Authority, Kotak Mutual Fund as well as Nomura. So ICICI Pru MF and Kotak Mutual Fund have bought around 2.5-3% stake in the company each. Back to you.
All right. Abhishek, thank you very much for that. We got a few other things. There is Texmaco Rail and GET&D. Mangalam is here with details on both. Mangalam.
Well, both of them in focus on account of specific news pieces. For Texmaco Rail, the board has approved fundraising via pref issue of warrants to the tune of close to around 150 crores, though we don't know the details of the price at which the warrants have been issued, to whom, etc. But this should be directionally a positive. And GET&D, they've won an order worth nearly 370 crores from Power Grid for 765 kilowatt shunt reactors. These will, of course, be delivered in FY26. So that is when the company perhaps will recognize its revenue. So 370 crore order win coming in for GET&D. That could also be in the green today.
All right, Mangalam, thanks for that. Let's do a quick recap of all the top stocks we discussed for you. Stocks with positive news flow: Vodafone Idea, Indus Stars, Vedanta, Bharti Airtel, Torrent Power, Salazar Techno, CMS Info, Texmaco Rail, and GET&D. While the only stock that's reacting to negative news flow is Capital Small Finance Bank. So those are all the top 10 stocks that we're looking at. But for the time being, let's turn our attention to the commodity markets. Manisha Gupta joins us as always to tell us what's going on there. Morning, Manisha.
Morning, Nigel. Thank you for that. I'm looking at the crude oil prices, which have extended gains for a third straight day and trading above $83 a barrel. There is still uncertainty over a possible Gaza ceasefire, while the conversations have continued for most part of last week. Also, the strong U.S. physical market demand seems to be supportive. The markets are watching out for the Houthis continuing to disrupt shipping in Red Sea, which has led to rise in freight rates and shipping times as well. Apart from that, the important news is that Russia has announced a 6-month ban on gasoline gasoline exports, and this is from 1st of March. The impact of this is something that we'll see in coming months. Apart from that, it also is about the OPEC and allies meeting, which is in the month of March, and that is in focus because this is what will tell us on how the next quarter is going to be. The expectations are that the OPEC and allies will extend the production output cuts that they did put out from Jan to March, and you could see them being repeated from April to June as well, and that is supportive.
Okay, Manisha, thanks very much. We'll come back to you for more a little later here on the program. Thanks very much. We'll take a quick commercial break here. Up next, we'll connect with Devin Choksi of DR Choksi FinServ for some fundamental stock analysis. That's coming up in just a bit.
This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Wednesday morning, middle of the week. I'm Prashant. With me, my colleague Surbi and Nigel. Guys, good morning.
Good morning, both of you. I think that's the most important cue. Middle of the week, we're halfway there. It gets better from here.
Indeed. But it's going to be, I think, quite an interesting trading session. That broader market underperformance, that's actually coming into play now. So let's see how long it lasts, because that's where the big party has been.
Absolutely. And I think let's kick it off from where we left off yesterday, as we always do for our viewers. So you basically had the market yesterday, which creeped up. I mean, it looked like it was not going anywhere for the first 1.5, 2 hours or so. And then in the second half, it moved up steadily, ending about 1/3% higher. So it was a small dip. I mean, if you're looking for dips, it was more like flat, slightly lower on the day in the first couple of hours of trade. And then that small intraday dip was bought, and we ended about 60, 70 odd points higher. Overnight markets, they were relatively unmoved. And I'll tell you why, despite the trio weaker US data. Now, it's kind of depending on, I guess, which side of the bed you wake up. It's good is good or good is bad is good, etc., etc. I'm talking about data and what the market makes of it, right? I mean, good data, hot data, strong data essentially means that rate cuts are pushed out and vice versa. Last night, you had US data, 3 of them data points, which actually came weaker than expected. Durable goods was weaker. You had the consumer board's consumer confidence numbers, which came through, and the Case-Shiller home price sort of numbers, which also rose, but rose lesser than expected. So weaker than what markets thought. But you had, the reaction which was, as I said, largely unmoved. Equities moved up. S&P was up a little bit. The Nasdaq was up about 0.37%. Basically a reversal of the day before yesterday's price action, where markets had dipped a little bit. The 10-year actually went up 3 basis points. We're at about 4.31 on the 10-year. You also had the dollar index, which held steady and flat just under 104. Oil prices, they've also moved up to, $83.50 a barrel. I'm talking about Brent oil prices. That's something to be watched out for. I mean, actually, both, what's happening on, the US yields and dollar, to my mind, become very important. Just one more thing, this US government shutdown business, we hear about it at least 2 or 3 times a year. But that's back again. I mean, it comes and goes, but for what it's worth, the US government, without a spending bill, will partially shut down on the 1st of March. Now that hopefully the spending bill will come, like it has sort of always come, and things will move on. But it creates a bit of uncertainty for that period, for the next couple of days or so. The US House Speaker and other politicians are working to prevent a shutdown. And as I said, odds are in their favor that they'll get this done. Now, on the upside, let's just quickly recap the levels and tell you what the market needs to do. Basically, we need to take out 22,297, which is about 100 points away from where we are. We left off at 22,198. So 22,297 is the first level. And then, of course, I mean, it targets, the level you will project higher is above 22,500. I mean, if the march upwards has to continue without a halt, the immediate target is 22,538. On the way down, the support zone remains the same, which is 21,900 to 21,700. The precise numbers are on your screen, which the Nifty needs to defend. Now, Bank Nifty saw an absolutely flat day yesterday. it's almost like it's wasting time before it picks up and decides what it wants to do. For the Nifty bank, supports come in at the 40-day exponential moving average, which is the closest level, 46,300, and then the 20-day moving average, which is 46,130 or so. The Gift Nifty will come up on your screen. You know, buying the dips has worked. It's worked yesterday as well. Notwithstanding how small the dip was. This morning, the Gift Nifty is indicating about a 17-18 point higher start. Surabhi.
Oh, absolutely, Prashant. I guess so with the kind of domestic money that's been coming in, I mean, it's no surprise that these dips are getting bought. At least that's what the market has been doing all this while. So just to add a couple of points over here, the range is intact, but, you know, the good thing is that we managed, despite all the volatility and the intraday choppiness, we managed to close at the higher end of the range. So 22,200 is still very much in play. Just to talk about the flows, because we don't have too many big cues or big triggers that the market is right now acting upon with earnings season behind us. So it's all about the direction of money. And that direction of money from the domestic institution side is obviously on the inward side. Yesterday's number was over 2,800 crores. But do remember that a lot of blocks are happening. Yesterday was the big CMS Info block. So that skews the number. But anyway, for what it's worth, whether it's block deals or just pure money coming into regular stocks, it's all on the way up. FIIs were net sellers once again. They sold stocks worth about 1,500 crores, which got me thinking, let's just size up the tally for the year. Remember, this year started with the big premise of major FPI buying coming into the Indian markets. Guess what? That's missing till now. January was negative 25,000 crores. February is not negative, but it's not much positive. We have one more trading session left, two more trading sessions left, and we are less than 1,000 crores up from the FII fraternity. In terms of sectors, there's absolutely no clarity, and there is no consistent sector which is on an uptrend. There's daily rotation that's been playing out. Yesterday, we had IT come back for a bit. Banks were sulking once again. There was a little bit of buying in pharma. So no clear sectoral trends. PSUs, by the way, even there, things are getting very mixed. It's no longer a unilateral, one-way rally. There is periodic profit-taking, even in the PSU lot, must keep in mind. So since we're talking about sectors today, purely from a news flow standpoint, because it is all about individual stocks and news flow that's driving the action. Today, I'll watch out for the telecom space, and that's because of two reasons. One, of course, is Vodafone Idea's board has finally approved this big fundraising plan. 20,000 crores in equity is what they're talking about. Promoters will also chip in. We need to see who the other investors will be and more details on this, and that will play out as, we go along. The second is Mr. Sunil Bharti Mittal. He was speaking at the Mobile World Congress in Barcelona. He's made some big sort of statements. He's saying that he expects Bharti's enterprise business to move from $3 billion to $10 billion. That's the kind of potential that he's looking at. And he said that they want to exit a lot of the non-core businesses like insurance, food delivery, etc. So he wants Bharti to be a digital play. The core telecom business, the payments business, that seems to be the big focus area. So while we are sort of, playing within the boundaries, Nigel, I think telecom is at least one thing that I'll watch out for.
Well, that's right. In today's trading session, I just want to highlight three big points that I'll be tracking today. In the last couple of days, we have been seeing that the headline index, well, that's been doing pretty okay, but there is some pressure that we're seeing in the broader market. So first up, you'll have to say on the headline index, that's the Nifty and the Nifty Bank, the uptrend is intact. The 20 DMA is a reference point on the downside. Last couple of days, as I said, the mid and the small cap indices, even yesterday, intraday, the mid cap and the small cap indices, they lost their way a little bit. So do they want to pause for a little bit longer? That's another point. And finally, post-market hours, we'll be getting in the Nifty changes. That's what the NSE has said. The committee will be meeting. So I'll be tracking a few stocks out there, and I'll get to that in just a bit. Well, in terms of, the other quick data points that we should be looking at, the FIs, what do they do? Well, they added more longs than shorts. Not too much movement out there. Continues to be in that vicinity of around 45% longs and 55% shorts. Moving to the other important points then. The 22,200 call, 22,300 call. Between them, there was a good amount of open interest built up. So the sense you get is there is writing being seen at these levels. The bears believe they've got this covered. At around, at around this 22,300 to around 22,350. So that's the resistance level we're looking at on the upside. On the downside, the 20 DMA, as I said, you'll say this uptrend is intact till that level is holding out. And similar is the case with the Nifty Bank. Because if you plot a chart, you'll see we're bang in the middle, just a little bit below that 50 DMA and a little above the 20 DMA as we speak. What the bulls will want is the Nifty Bank gets past that 50 DMA and then makes a dash towards 47,500. As we have been saying, though the Nifty is nearing its fresh all-time high, you have the Nifty Bank that's close to 3.5% away from those fresh all-time highs. So that can get up and going. That's what will push the Nifty higher as well. The stock that I'm tracking for the day is Shriram Finance. Yesterday, you did have, a lot of volatility out there. And the NSE indices, they're schedule a meeting for post-market hours, so we'll get the outcome out there. Most brokerages, alternate researcher, Novama case in point, they have plotted out that Shriram Finance is likely to be the most likely inclusion. That's what they have said in their earlier notes as well. But yesterday we saw a little bit of volatility and there were short rollovers being seen, particularly in the March series, not for the February series. So the rollovers were on the short side. But the post-market hours, you didn't get any new stocks that came into the F&O list. That was the fear, that if there is a new stock that comes in the F&O list, then Shriram Finance may not make it. So maybe we see, that stock in focus. Maybe it starts off a bit in the green. Valuations are in the favor, but importantly, will it get included in the Nifty? That's the most important trigger, and that comes post-market hours. So owing to the short build-up we saw yesterday, and owing that we didn't see any kind of new F&O entrants, maybe this chances still stand that it gets in. Let's see how this goes.
Okay, all right. Well, Nigel, you come back out over here, but we'll watch out for those cues and, of course, some of those important levels to track for the index. With that, let's move on and kickstart the show with the equity call of the morning. Vikash Jain of CLSA says that after a 40% jump in 3 months, the BSE PSU index is nearly the most stretched in a decade on key valuation parameters. He says while the playbook of the past 2 elections suggests top for the PSUs only by June, stretch valuations makes us selective in the space. He says their analysis shows the financials, commodities and the utility sectors make up 85% of the free float market cap of 82 listed PSUs. He says banks and key commodities are the most stretched amongst PSUs versus peers, while they see relative value in power utilities and like themes such as defense. Vikash says ONGC, Oil India, Coal India, NTPC, Power, Finance, BEL and HAL are their preferred PSU stocks. So that's how CLSA is playing the PSU.
All right, well, that's Vikash Jain of CLSA. Let's get you some money market views now. This is Pankaj Chitlangia of First Basis, who says that resistance is near 104.5 levels for the dollar, is expected to halt the gains there, leading to a gradual decline towards the 103.25 levels. He says, supported by the RBI intervention and minimal events, the USD INR is likely to continue its downward trend with resistance at 83.05 to the dollar. He says the weekly Bollinger Band have started expanding when the USD INR has been closing below the 20-week exponential moving average for the last 4 weeks, and this increases the chance of it dipping below 82.7 to a dollar, triggering further fall in coming weeks.
On bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond yield traded in a range of 7.04 to 7.08% during the week. He says in the absence of any GSEC auctions, the market traded in a narrow range, taking cues from global yields. He says the MPC minutes were in line with market expectations, reiterating the wait-and-watch mode on inflation. He expects the 10-year benchmark to trade in a band of 7 to 7.10 for the current week.
All right, we have a lot of stock-specific action to track today, and we get to that in just a bit in our special Top 10 segment. We're looking at Vodafone Idea, Indus Stars, Vedanta, Bharti Airtel, Torrent Power, Salazar Techno, CMS Infosystems, Texmaco Rail, and GET&D. Well, that's a long list, all of them likely to open up in the green. On the flip side, Capital Small Finance Bank could be reacting to negative news flow.
All right, well, that's basically the lineup of stocks you'll hear on in just a bit. We have Dean Kim of William O'Neill & Company who's joining us. Dean, good to have you with us here. Thanks very much. On just price action and technicals, is the market looking good for more, or are we running into some consolidation here in India?
I think India, it's looking pretty constructive, trading above all key moving averages. I think we just need to surpass the highs that was established in January and wore off to all-time high. So I think last time when I was on, I kind of talked about sort of volatility compression, but it looks like, we've gone beyond some of the resistance. So the market looks a lot more constructive now than it did, let's say, a few weeks ago.
Dean, hi. Morning. So, what's the sense on the big sector here, which is banks? There's no clear trend that's emerging. It's sort of one day up, one day down. On the valuations front, I mean, it's been an underperformer. We know that. But what is your recommendation on some of the bigger banks here?
Yeah, I think some of the public sector banks, they've done really well. Punjab National Bank, pretty much extended I do see, a couple of banks that look fairly attractive. One is Karur Vijaya Bank. That one looks pretty constructive, as well as Indian Bank. A lot of the private sector banks, however, I think still needs a lot of time to recover, trading well below the 200-day moving average. And that may come from the fact that the Indian yield curve, if you look at the 10-year versus 2-year, it's pretty flat. So I think the market perhaps may be looking for sort of signals in terms of monetary policy or where the election's going, and we'll probably see the yield curve move. But until you see a steepening of the yield curve, probably the foreign investors will stay on the sideline. And that's probably why the private sector banks have sort of underperformed. But over time, I still believe that, when you have organic growth of 20% or more in the economy, the banks are going to perform very well. Just needs time to sort of absorb the current situation of the flat yield curve.
Okay, all right. Hi, Dean. Morning. Nigel on this side. We got a couple of important data points as well that are lined up. Today, the wholesale data, you have the inflation data that comes out tomorrow as well from the United States. What are your expectations out there, and what are you pricing in terms of the Fed? Earlier this year, people were gung-ho. March, May, June, we'll see rate cuts. Now it appears the nearest possible cut could be coming in only in June. Your take?
Yeah, it seems like every data point that comes out, we're sort of bracing for market reaction. So we have preliminary GDP growth numbers coming out tomorrow. Market's looking for 3.3%. And so I think if we get a better than expected GDP growth, and then on Thursday, you have the PCE number coming out. And if the PCE number comes out cooler than expected, then that would be the Goldilocks situation for the market. But of course, we'll see what the data throws off, and we're just going to have to take it one data point at a time. But I would say that the Fed definitely zeroes in on the PCE, so that's going to be a very important number for Thursday. And then we can kind of interpret what that means in terms of rate cuts, when and how many. But so far, definitely that rate cut window has been pushed out because recently the CPI number's been coming in pretty hot. And perhaps the market is cutting back its expectation in terms of the rate hikes. We're going from 4, now people are talking about 3 rate cuts. Rate cuts on it. And so let's see what the PCE brings on Thursday.
Yeah, that's the all-important number, isn't it? Markets around the world really waiting and bracing for that one. Thank you very much, Dean. Good chatting with you. Short chat today, but appreciate you joining us on the show. With that, we do have to take a very quick break. We'll come back with our list of top stocks to watch on the other side.
Welcome back. Well, let's tell you a little bit more about Vedanta. First of all, let's run you through the 5 big takeaways, what the management said. They said that now they have the potential to deliver EBITDA of $7.5 billion of EBITDA. Most on the street are not expecting them to get to that mark. But, for the time being, they're saying that they have the potential to deliver that. Point number 1. Point number 2 is, because the aluminum and zinc operations, there's a lot of capex that's gone in there. So that's going to start contributing, and that will start contributing from this year itself. And Nuvama, in their note, they're saying that incremental cash flows from these assets could be $1 billion itself. So that's the second factor. The management on their debt front, they're saying that there's going to be a reduction at Vedanta Resources. Let's get some of those graphics up. Vedanta Resources by $3 billion by FY27. And they've also promised that in the listed entity, which is Vedanta Limited, which all of you all will be, tracking more than the Vedanta Resources problem, they're saying no incremental debt comes into Vedanta Limited. How do they do that? That's because there's going to be monetization of the steel assets that they've been talking about. Earlier, the street was bracing for Q4 if in case they could get it done. Now they're promising that by Q1, FY25, they'll get it done. And on the demerger, they're saying that unlocking of that will happen in FY25. So you'll have many more Vedanta listed companies. So you can pick and choose whether you want to play aluminium, zinc, and the other assets, oil and gas as well. What a brokerage is saying, I have two of them. Nuvama, they remain positive on the stock post the analyst meet. So they have a buy rating out there. They've marginally upped the target price by 23 rupees odd. They are also working with the dividend payout of around 40 rupees each in the next two fiscals. So they're saying there's a dividend sweetener coming in there. And they're also up their EBITDA estimates by 2 to 3% to factor in higher power sales. CLSA, well, they have upgraded the stock from sell to underperform. And they've upped their target price from 230 to 260. All eyes are now on delivery of Mr. Anil Agarwal and his team. For the time being, they are noting that at the parent level, they've got things sorted out on the debt front. And out here, you won't see any more pressure. So let's see how this goes.
Okay, well, usually it's Vedanta that manages to hit all the headlines, and usually it's a pot boiler with Vedanta. There's one non-listed company which has managed to sort of take away that crown from Vedanta, and that's Byju. So just for a bit, I mean, it's beyond the market, but it has a huge bearing on the overall sort of startup ecosystem and what's happening with new age companies, etc. So therefore, very important to cover from a news perspective. Now, Byju's $200 million rights issue closes today. All of this amidst that influential group of investors challenging the fundraising exercise and filing an oppression and mismanagement case against the company in the courts. Now, the National Company Law Tribunal, the NCLT, which heard the matter yesterday, has reserved its judgment for now. It is, in fact, given 3 days' time for Byju Ravindran, Think and Learn, and the Ministry of Corporate Affairs to come out with their responses to some of the very serious allegations that these investors have raised. Ritu has been, of course, tracking all of the twists and turns in this matter. Ritu, the question is now, what happens to the rights issue in the interim, and what next?
Well, Byju's $200 million rights issue closes today, and at this point of time, it is unclear whether the company will be able to allot the shares to receive the funds, because the matter is going to be subject to NCLT's final orders in this case. Now, last evening, the Bengaluru bench of NCLT heard the oppression and mismanagement suit filed by a select group of investors against Byju's management. This petition was filed by 4 investors: Prosus, General Atlantic, Safina, Peak 15, along with support from other shareholders like Tiger Global and Owl Ventures. Now, NCLT did not declare the rights issue void as was sought by investors, but it merely granted 3 days' time to the co-founders, to Think and Learn Private Limited and the Ministry of Corporate Affairs to submit their written replies in this matter before the court takes the final decision. Now, during the course of the hearing, the court did observe that the board cannot allot shares via rights issues unless they increase the authorized share capital, and the increase in authorized share capital will require majority shareholders' consent, for which the company will have to convene a shareholders' meet. So we spoke to both of the sides to understand what happens when it comes to this rights issue that is closing today. While Byju sources said that the rights issue will continue as per plan and close today because the NCLT did not grant any stay on the matter, the investor sources said that the company cannot use the funds until a shareholders meet happens to approve the increase in the authorized capital, and whether or not the rights offer will go through will depend on the orders of the court. Now, during the course of the arguments, of course, you had the investor council claiming that they're between the devil and the deep sea with this issue. If they don't subscribe to the rights issue, their stake will fall very sharply, and if they do, there's no saying where the proceeds are going to go, because the company has claimed the money will be maintained in a separate account. Nobody's to say what this account is. They've claimed it'll be managed by the CEO and CFO when the company does not even have a CFO. Meanwhile, the Byju's counsel argued that investors on one hand are admitting that the company is in dire need of funds, but on the other hand, they're trying to stop all funding sources, arguing that blocking this rights issue and not allowing the company to raise funds will be akin to killing the company. Byju Ravindran, in his earlier letters to employees, has claimed that the issue is fully subscribed, but will the company be in a position to receive or utilize the funds? That is going to depend on the NCLT ruling.
Thanks, Ritu. You keep tracking that. We'll keep coming back to you. Well, for the time being, let's get in Deven Chauksi, MD of DR Chauksi FinServ, who joins us on the show. Hi, Deven. Morning. Good to see you, Ben. Deven, wanted to ask you about this big fundraise plan that's been announced by Vodafone Idea. The street clearly was hoping for something. Do you think they've got enough?
Hi, Nigel. Good morning. Well, I don't know. I think this is going to be a game changer. On one side, you have got 2,15,000 crore worth of debt in the balance sheet, even though out of which 1,85,000 crore belongs to the government and balance 20,000 to the outside lenders. Still, I think in order to pay out, I think this particular debt or service this debt, they require to raise money, be it equity, be it I think equity along with debt. They will have to bring that money in to first clear whatever the outstanding dues that they have to clear them. Second most aspect is that spending money towards or expanding the activity into the 5G area of business. That is where I believe I think it will be an interesting thing to watch out for. Because even by any yardstick, if you look at it, I think the customer base that Vodafone Idea currently has is largely leaned towards the 2G segment of customers. The 4G segment of customers have already moved out, I think, to Jio and Bharti. And those customers are being converted into 5G by these two players. So from that perspective too, I don't know, I think how the 5G journey would happen. Even if it does happen, I think there would be probably 10, 15 years behind the curve as I see it, I think, as far as Vodafone Idea is concerned. So maybe I think it will be an interesting thing to watch out for as to how the game changes or what could be the game-changing move here onwards. One would like to see more details coming out before taking any kind of a concrete view on the subject as far as I'm concerned.
Devin, hi, good morning. Good to have you with us here. Just wanted to talk to you about if you have any thoughts on this Shriram Finance business. I mean, the stock fell about 5 or 6% yesterday. I think there were some technical sort of reasons as well. I mean, speculation around technical reasons about, index, whether it sort of stays in the index, goes out, and other stocks are included, not included. I mean, as a business has been doing fantastically well. It used to be about 6 or 7 months ago, it used to be the cheapest and one, of course, the second largest NBFC out there. Valuations have come up quite a bit, but what do you make of it, Shriram Finance?
Good morning. So leave aside, I think, those technicalities which you referred, and probably I would not know as much in detail about them either. So I think overall, the business per se remains, I think, quite a strong proposition. In fact, I think that's a good point out here that I think most of the customer segment verticals in the NBFC space in general, I think, are performing well, largely because of the growth assumed in the economy. Be it into the financing of vehicles, be it into the housing finance, be it into vehicle credits, whichever space you look at in the NBFC space, I think each of these particular spaces remain comfortably positioned as far as I think the growth is concerned with respective companies. In particular, Shriram, I guess I think the business condition remains, I think, extremely favorable for them. The vehicle financing business particularly, I think, remains, I think, a strong play and likely to remain stronger one, given the kind of change and the shift which is happening towards the new vehicles. Probably in the commercial vehicle space, I think this company is very strong. I believe that I think they are assuming, I think, a very strong growth trajectory. Do not know as much about the technical aspect at this point of time on the subject, but the fact remains that the company is well positioned to take the advantage of the situation in which the business is expanding.
You know, Shriram, Prashant, I'm just looking at the FY26 book value. Some on the street are estimating close to around 1720 rupees approximately FY26. So in that case, as you said, it's relatively cheaper. So the fundamentals are okay, but the near-term trigger will be what happens with regard to this outcome of this meeting. And for the first time, I think, I'm tracking this index changes for many years. For the first time, the exchange has come out and said we are having a meeting today to consider this. Normally, this announcement comes.
It's a routine announcement usually.
Yeah, it comes before February 21st odd. But now they've kept it, for the slog over. Tomorrow is the final day, by the way. Because there has to be 1 month notice before the end. So the end is March 31st, so before that. So let's see how it goes. There's a pot boiler, something that was routine suddenly become a pot boiler. So let's see how that goes for the time being. Most are estimating that Shriram comes in and UPL goes out. But that's as per what we have. We'll have to see if there's any further changes. Devin, I want to ask you about Vedanta. That's never short of excitement, right? For the last many years that I'm tracking this stock, Mr. Agarwal manages to pull out a rabbit out of somewhere or the other. For the time being, he's making all the right noises. He's saying debt has peaked out, EBITDA will go up, there's no further, pressure on the listed entity, and the debt number at the parent entity is very much under control. He's talking about reducing it by $3 billion. At 260 rupees, do you think risk reward is favorable, or you'll say no, I'd rather wait by, and there are other options that I could play?
So then, Nigel, the view would be that definitely from the valuation perspective and the opportunity point of view, I think the stock probably has got nothing to lose at this point of time in the current market price. All equations are working in favor. I do agree with that part of it. Existing businesses are stable as far as the EBITDA is concerned. And as far as I think the debt repayment ability is concerned, I think the company has done its best by way of I think convincing the lenders about I think the repayment. So to greater extent, I think they have a breathing space. And given the fact that I think they have entered into the restructuring program, I guess I think that will be the overhang which will continue for another year and a half or so. Till that point of time, I think the stock price movement I think may not be very significant, even though the business condition remains extremely strong in each of the verticals, be it in the metal space, the white metal, as well as I think the ferrous metal. All at the same time, I think the oil and gas business, the condition remains, I think, extremely comfortable for them as far as business is concerned. Maybe this restructuring business is out of the next 1.5 year. Thereafter, one could possibly see this company much better, achieving much better growth trajectory.
Okay. All right, Deven, thank you very much. Good chatting with you this morning. Thanks for joining in. We look forward to more conversations ahead. Well, with that, let's move on and welcome in our first corporate guest on the show today. The company in focus is Paras Defense and Space Technologies. Now, it came out with a slightly weak third quarter. There was subdued performance on the top line. There was margin contraction. And there was some pressure at the profit level as well. And in other news, the cabinet has, of course, allowed 100% FDI in the space sector. That, of course, impacts companies like Paras, which operate in this segment. Amit Mahajan, Director Technical and R&D at Paras Defense and Space, is with us. You know, first on the regulatory front, Amit, I just wanted to ask you whether this 100% FDI in the space, whether that kind of impacts you in any way. Are you looking to raise more capital? Are you looking at any equity collaborations with any potential foreign partners?
Good morning. Thank you for having me on the show. On the fund side, we are not looking to raise any funds. On the capital side, we are not looking to have any equity collaborations. What this FDI allows is there are a lot of space startups which are floating around in the country. Paras is working with a lot of space startups. Now, what happens is these space programs get another momentum. When you have an FDI coming in, the lot of revenue that is required to put up a mission and then put it up in space, all of that gets solidified. The chances of it becoming successful only increases multifolds. Now, when that happens, all these missions will have a lot of contribution by companies like Paras. Some areas where we are doing a lot in the mission, some areas where we are doing only the optical payloads in the mission, some areas where we're doing the radar or the synthetic aperture radar kind of things for the mission. All of that, when it goes up in space, all those funds will be mobilized and the success rate increases.
Okay, Amit, so got that. I mean, since you're not looking at it for your company, let's move on and talk numbers. The third quarter performance was a little subdued, as we pointed out. I mean, there was margin contraction, top line, there was hardly any growth. But you've guided for, I think, up to 40% revenue growth for the current year. Will you be able to deliver that?
Yes, the third quarter was subdued for a couple of reasons, which are a part of the business. The defense electronics delivered more because we're a project-oriented company. At the end of the year, which is the real sign of how we should be looking at the company, we will be doing in excess of 30%.
Okay, you'll be doing ahead of 30% by the end of the year. And give us a sense on margins as well, because they contracted and came down to, I think, just about 21%. Yeah, just about 22% at the end of the third quarter. So why the compression, and how do you plan to end the year at the EBITDA margin line?
So there is nothing to worry about at the company level. First, I would like to mention that. The subsidiaries, if you look at Paras Aerospace, Paras Anti-Drone, and the other subsidiaries that Paras Defense has employed a lot of manpower, and at the same time are doing a lot of R&D expense. Now, these subsidiaries are not yet doing any revenues. All of these R&D expense currently get parked as an expense for me, and because of which you see certain losses. Now, these losses, as they will be ironed out at the end of this year for sure, but these will convert into revenues next year and then will jump the profitability. For now, at the end of this financial year, we should be able to sustain the margins that we had last year.
Okay, we'll leave it there. Appreciate you joining in this morning with that. And it's a good conversation. Thank you very much for being here on CNBC TV18. I think we've got about 14 minutes to go for the pre-open session. Anuj is standing by with what he's making of the trade setup. Anuj, morning.
Morning, Prashant and Surabhi. Just one of those days where I have this gut feeling, premonition, whatever you may want to call it, about 100-150 point rally, which takes Nifty to a new all-time high. And not just that, the market's sensing something big, maybe even 22,500. Yesterday's price action was very positive. It reaffirms your basic buy on dips theory, and that too around crucial levels. Earlier it was 20-day exponential moving average. Yesterday we bounced back right from the 10-day exponential moving average. The series low was made on day one, and normally in such series you end at the highest point of the series. So today and tomorrow could be interesting. But the market is finally beginning to see large cap outperformance. We discussed it yesterday as well. Even yesterday, if you see, the Nifty rallied from lows, but mid-cap actually fell. If you can see, if you can see the chart, for example, of Nifty and the mid-cap index for the day yesterday. Okay, I wanted intraday, but that's okay. That will also work. Now, this month, Nifty is up 2.2%, mid-cap is up 1%, and the BSE small cap index is actually up 0.4%. So after a long time, in the current run at least, is the first time that the broader market is underperforming. Not just that, if you look at the market breadth over the last few days, it's clear signs of distribution which are visible in a lot of high-flying stocks. So just keep an eye on that market breadth. Last 2 to 3 days has been quite poor. Now coming to the index in terms of levels to watch, first support is 22,085, which is 10 DEMA and yesterday's low. And then the bigger support, of course, is 21,970, the 20-day exponential moving average. Resistance comes in at first 22,298, which is the all-time high, and 22,363 based on the options data. On the Bank Nifty, which is still underperforming, there's a range. If you want to play the smaller range, that's 46,300 to 46,750. And if you want to go for a slightly bigger range, it's 46,000 to 47,000. Keep in mind, today is Wednesday, the last Wednesday of the month, the only day of the month in which you don't have any expiry.
Okay, all right. We'll remember that. Tomorrow is Big Thursday as the month goes out from an F&O perspective. Thank you, Anuj, for that. We'll take a break on that note, come back on the other side and get you a lot of the trading calls for the day. We'll have Mitesh Thakkar as well as Sudarshan Sukhani joining in.
Okay, welcome back. There's 9 minutes to go for the pre-open session. We have our technical experts with us now, Mitesh Thakkar and Sudarshan Sukhani, to take us through what they're making of things as we begin this Wednesday. Gentlemen, great to have both of you here. Prashant this side. Mitesh, let me begin with you. I mean, again, a slow kind of a start. Looked like the market was going to consolidate, and then there was a pop. Not much, but about 0.4% higher on the Nifty. This morning, what's your sense? More coming or still in the range?
Morning, Prashant. So I think yesterday we kind of, were closer to the lower end of the range and we bounced back from there. I think all this movement is still part of a sideways consolidation. Broadly looks like a 200-250 point kind of a range between 22,050 and 22,260. So I think that's the broad counters. You can give and take 20-30 points here and there. But the way indicators are poised, one, they are turning flat. Two, I think the volatility indicators are dipping. I think this consolidation might last for another 3 to 4 sessions at least, maybe more. But yeah, the initial feel is that 3 to 4 sessions might still be in consolidation. So the idea should be to try and buy near the lower end of the range and try to take profits on every 100-150 point kind of a rally.
Okay, got that. Sudarshan, let's come across to you. What about you? How would you approach trade?
Yeah, good morning. The Nifty is in a narrow trading range for the last 9 days now. 9 days is a lot of time. Now, there is no reason to suspect that the trend is coming to an end. The trend is intact. There is no sign of an end of trend. So this narrow range should break on the upside. That's the normal process for an ongoing trend. I would be a buyer in the Nifty today. We've had 2 very choppy sessions, including one extremely choppy session yesterday. The Nifty does look poised for some kind of a rally. We had a very decent price action in the second half yesterday. So the Nifty is a buy. Now the stops are getting raised. First 21,800, 21,900. Now the stop is 22,000. With that as a stop loss, I would go long in the Nifty. And almost the same view comes to the Bank Nifty, where it's not a range, but the Bank Nifty has fallen to a significant support level. That support of 46,300 is a stop loss for a long trade.
Got it. Okay. All right. So you'll be looking at going long. Sudarshan, you continue then. You tell us what about individual stocks? You've given us your view on the headline index.
Well, Bharti Airtel is a buying opportunity coming down to a decent support level. Buy with a stop under 1105. Dalmia Bharat is an intraday short. The stock is in some kind of a downtrend. Intraday short with a stop above 2110. Lupin is in a buy. It's on the verge of a breakout from a long trading range, and it's got a big rally behind it. Stop buy with a stop under 1595. And finally, MCX, which is in a narrow locked range, may break on the upside. Buy with a stop under 3650.
All right, got that. Mitesh, what about you? What are your trades?
So Sudarshan has picked up MCX. I have a buy on BSE. I think both the exchanges are showing signs of some reversal after a pullback. BSE is a buy with a stop at 2345 for targets of 2500. Also a buy on Nestle with a stop at 2570 for targets of 2655. And I have sell calls as well. So Lalpath Lab is breaking down. In fact, we had a sell on Metropolis yesterday. Both these stocks look corrective. Lalpath Lab can be sold with a stop above 2400. Look for targets of around 2310. And a sell on Hind Copper with a stop at 260 for a trading pullback to about levels of 240.
Mitesh, just briefly, Shriram Finance sold off sharply. The charts, how's it looking? And is there a trade?
See, I think, Shriram Finance had a very good rally and then was making new highs. And yesterday we saw first signs of profit booking. My sense is that this profit booking might continue a bit more. And because after a rally from about 1600 levels to about 2400 levels, we are getting some kind of a signs of pullback and a profit booking. So I think we might actually see the stock price dip to levels below 2200, between 2200 and 2150 are where the weekly averages are placed. I think that's where we'll see good support come.
All right. Got that. Gentlemen, we'll leave it there for now, but we'll have you back soon. A bunch of more stocks. I want to talk about BSE, for example, which after some consolidation saw a sharp move high. But we'll talk about BSE and more stuff in a bit. Have to take a break here. We'll come back with a pre-open session. We'll also have Nitin Soni of Fitch Ratings and Gurmeet Chadha of Complete Circle. The Vodafone Idea board, of course, has approved raising 20,000 crores through the equity route. The potential size of the fundraise, including everything, could be about $5.5 billion. Stay with us. That conversation comes up. Okay, welcome back. There's 2 minutes to go for the pre-open session. Now we'll talk about that Vodafone Idea story because there are so many angles to it, right? For years, markets and many who've sort of kept the faith that Vodafone Ideas will come back, will get an infusion, etc. It kind of got moving yesterday. The board approved basically a potential fundraise all the way up to about $5.5 billion or so. So there's a mix of equity, debt, promoters bringing in money, and all of that. So what are the implications of this? Gurmeet Chadha is Managing Partner and CIO, Complete Circle. He's joining us right now. Gurmeet, let's just step back and look at the bigger picture, right? Does this make a real dent into the big debt pile that Idea has and all that it owes to the government? How do the big numbers really look for Vodafone Idea if they get this done?
Shant, they have announced it in the past. The board, I've been hearing this for a while now. I think it's almost been 2-3 times board has called upon, potential fundraise, and of which I think 20,000 crores is equity. I would like to see who the participants are. How much are the promoters coming in? I think one concern for the market, which also I think has got to do with the management commentary, has been, promoters being unwilling, whether it is, the Aditya Birla Group as well as, the Voda PLC. So I think out of the equity raise, they want to see some promoter commitment and the depth of the external investor. I think that's extremely important just in the fundraise, because this business requires continuous capex. Today it's 5G, tomorrow it will be 6G, right? And there are deferred liabilities, and they've been losing subscribers. I remember at the time of merger, they had 42 crore subscribers. They've already lost more than 50%. And it's like in our language, we call it as a leaking bucket. The company has a negative net worth. The debt is now excess of 2.2 lakh crores. So I think the quantum would be just enough right now, being sentimentally positive. There's a lot of repair work, a lot of spectrum allocation they need to have just to compete with Jio and Bharti, because they are really up the curve now. And it's not just about wireless additions. It's also about what you bring to the table as the complete digital portfolio. So I am still not convinced. I would like to see who comes in, more. It's a very strong player coming in. Then we'll probably make a view on it.
No, absolutely. Nitin is also with us. Gurmeet, well put. I just want to make a quick mention. The pre-open is on, and I think Shriram Finance is starting about 5% higher. Just wanted to make a quick mention because there's a lot of interest around it. In the last 1 or 2 hours or so, the stock did sell off sharply. And that's a big move. 7% on Shriram Finance this morning. So that's got to be, it was the stock of the day yesterday on the downside, and I think this morning is likely to be the stock of the day on the upside as well. 7.5 higher. So that's a big, second largest NBFC, assets under management of over 2 lakh crores. And of course, still not very sort of unreasonable valuation-wise. Sharp sell-off and a reversal coming in today. Nitin Soni, Senior Director, Corporate Ratings at Fitch, is also with us. Nitin, good to have you with us here as well. Your thoughts? You heard, I'm assuming you heard some of what Gurmeet said. He said this has been kind of attempted many times in the past, but he'd like to see the list of investors who actually come in. Although this time the promoters are also putting in money. Go on, Nitin.
Sure. Thanks for having me on the show. So I completely share the views from Gurmeet. I think what we have seen that Vodafone Idea is looking to raise funds in the market, but they haven't been successful. They have been trying to raise funds from the last 1 or 2 years. This announcement is good. They need money. Definitely, they haven't launched 5G, while both Bharti and Reliance Jio are already have launched 5G and adding 5G subscribers. To me, it feels like Vodafone Idea is missing the boat on 5G, and they could actually lose more customers because they haven't launched 5G yet. So even if they are successful in raising this kind of a money, 45,000 crore, it will still take up some lead time for them to launch 5G and compete effectively in the market. And they continue to lose subscribers, about 1 to 2 million subscribers every month to Jio or Bharti. In terms of the financial performance, they have performed okay. The average revenue per user has increased to 145 in the last quarter, but it's still well below Bharti's and Jio subscribers. So they definitely need to raise a large sum of money to launch 5G and to augment their capex, which they haven't been doing much. Otherwise, I think they will, the customer churn will increase going forward.
Well, if the market's verdict is anything to go by, the market's not enthused. And that's probably because there weren't too many specifics. There was a big headline of 45,000 crores, out of which 20,000 crores is equity. But the names were missing, specific timelines and dates were missing. Nitin, just comment on the other part as well. So they're saying 20,000 crores equity and 25,000 crores of some format of debt financing as well, and they say that they're in talks with the lenders. How critical could that be in restoring confidence? And what would you like to see immediately on the table for the market to start believing that a turnaround is indeed in the works?
So I'm sure that the lenders would be also looking at this equity raise, and I'm sure that lenders wouldn't be comfortable to lend additional money if there is no equity raise. So I think the first step is that they should get this 20,000 crores from strong investors who probably are also willing to add on to this investment later on, because this 20,000 crore may not be enough. As you know, these telcos need to continuously do capex and they need to roll out 5G. And the second step is to get this 25,000 crore of debt, which will add on to the 2.2 lakh crore of debt they already have. So this is really critical, but I'm sure this is not the end of the fundraising. They would need to raise more funds going forward, even if they do this 45,000 crores, because the moratorium period will soon end on the AGR payments and the other spectrum dues. And as you know, the government has already converted the debt to become a 33% shareholder. they might have to increase their shareholding if they're not able to raise funds in future and not able to pay the spectrum dues and the AGR dues.
Okay, Gurmeet, since we have you with us, Vodafone Idea, of course, we need more clarity, we need more specifics. But overall, how are you looking at Bharti? I mean, do you have any interest in the other two telecom plays that are out there? We had a lot of positive statements from Mr. Sunil Bharti Mittal at the Mobile World Congress just last evening. He's saying selling down, getting away from non-core businesses like insurance, talking about the enterprise segment really building up. Any thoughts on Bharti?
Extremely constructive. I think we've seen some re-rating in the stock already in last 12 months. The ARPU is best in the industry at close to 210 now. Also, if you see the data usage, it's continuously climbing up for them. It's almost now 22 GB per month. They continue to gain on 4G net additions quarter on quarter. It's now almost 71% of the portfolio. So, and one thing which I like there is that premiumization is happening in other segments also, other than the mobility. So if you see OTT, if you see broadband, if you see the complete digital portfolio they have, the enterprise segment, Airtel Business, I think that's premiumization is happening there. Then there are emerging spend areas which they pointed out, in the call on CPaaS, on security, on data centers. I've mentioned this. I'm extremely positive on data centers with the big Indian corporate boys getting into it. More importantly, I think they kept capital allocation. If you see, they were very smart in 5G auction. They've not only bolstered their mid and low band in 5G, they've got many circles. So they were very prudent in spending money. There's no further much capex now for FY25. So if you see last 2 quarters, the free cash flow is around 5,500 odd crores. So if you keep adding 5,000 crores every quarter as free cash flows, that could lead to some debt leveraging also. The debt is already down to almost 1.2, 1.3 lakh crores. So there is financial leverage, there is operating leverage, and there is, premiumization playing out. So I'm extremely constructive, even at these price levels.
Okay, no, I got that. Nitin, just one last point. In the space, in this telecom space, right, what's the real roadmap? I mean, for players, and fundamentally, which is the one business that you, from a equity, maybe unfair question to you, but that looks the strongest from here? Now, I mean, it doesn't have to be pure carriers, but on the tower side, etc. as well.
Sure. I think we have a stable outlook on the sector for 2024, and we do rate Bharti at BBB- with a stable outlook, and their financial performance has been really excellent in the past few years. And the whole industry has been repaired with the consolidated market share between Jio and Bharti, and they're still gaining market share at the expense of Vodafone Idea. I think the story which will play out in the next few years is all about 5G. Data consumption, which is 22 GB, is one of the highest, I think, probably in the world, and definitely highest in Asia, is still going to grow because India is a unique market where people consume data on a small screen, and they don't they move and they want to look at the Netflix and YouTubes of the world on their small screen on mobile phones. So data consumption is going to grow. The industry has not seen a price hike in a while because of probably high inflation and some of the reluctance from the players. But I think the average revenue per user will still grow because of higher data consumption, because of customers moving from 2G, 3G to 4G and then eventually to 5G. So the ARPU will keep on increasing. EBITDA margin expansion will happen because of the improvement in the average revenue per user. And I think Jio and Bharti would still be, in our view, would be the highest, they will experience highest revenue growth in Asia Pacific telecom market. So high revenue growth led by the higher data consumption. That's really the story going forward.
All right, we'll leave it there. Nitin, appreciate you joining in. Good speaking with you. It's been a while. And Gurmeet, thank you very much as always for joining us here on CNBC-TV18. Thank you very much. Well, 9:10 calls. Sudarshan is with us. Sudarshan, what do you have?
Well, Bharti is a buying opportunity with a stop under 1105.
Okay, straight off the telecom discussion, Bharti, a buy with a stop under 1105. Mitesh, what about you?
I'll go with the buy on BSE for targets of around 2,500.
When I was wanting to ask you about BSE, and there it comes. So ended about 5% higher yesterday, and I think it's starting slightly higher. 24.10 on BSE in the pre-open session is what we have. But what's today's momentumizer stock of the day? So let's get that going with Mangalam, who's standing by. Mangalam.
Well, the momentumizer stock is Jubilant Industries. The stock is at a fresh record high. Day after day, it's been hitting the 5% upper circuit. It's a cash market stock. So yesterday was up 5%. In the last 2 days, up around 10%. But this year, the stock has doubled, and we're not even done with the first quarter of this year. 124% higher. And over the last 12 months, the stock has moved nearly 277%. What explains this move? One doesn't know yet. But importantly, with this up move, we're seeing higher traded volumes as well. Traded volumes close to around 3 times 10-day average in yesterday's trading session, and that was marked by increased delivery as well. Close to 1.8 lakh shares marked for delivery, and this compares with an average of sub 10,000 over the last 3 months. And even if you look at the last 3-4 trading sessions, day before yesterday, we had just about 8,000 shares marked for delivery. The previous day, we had just about 15,000 shares marked for delivery. We had very few shares marked for delivery. Yesterday was one notable spike with an up move in the stock, and that's why it is the momentumizer stock.
Okay, got that. Thanks very much, Mangalam, for giving us the momentumizer of the morning. Let's move on. Abhishek is looking at Aavas Finances, been in the news. Abhishek, tell us, what were the latest comments like from the company?
Well, Jefferies have done a roadshow with Aavas Finance in Singapore, and they have written a note on the same. They have a buy recommendation, target price of 1,940 per share. They hosted the CEO with investors meeting in Singapore. A key highlight from that meeting has been the fact that the company is now, talking about multiple initiatives and, completion of tech rollout, which will aid in terms of growth as well as improvement in productivity ratios. So management is targeting loan growth on the upper end of their guidance of 20-25%. Remember that in Q3 it was around 22%. Management expects the cost of funds to inch up by about 25 basis points so in the coming quarter, and they have raised their lending rates as well, which will mitigate the rise of cost of funds impact on the net interest margin. Focus is also shifting on lower ticket size loans, which are actually better in terms of yields. So management expects OPEX intensity to ease, and that would aid the profitability and the return ratios going ahead. Back to you.
Okay, all right, Abhishek, thank you very much. Just watch out for the OMCs as well. There's a tinge of red on them. Nuvama is the latest one to come out with a call, and the call is actually bearish. So let's bring in Sonal, because this seems to be a fight split right down the middle between the bulls and the bears. Sonal?
Well, that's right. There are as many bulls on OMCs as many bears they are. So Nuvama was the latest one to downgrade these stocks. But let me talk about the positives first up, and then we'll talk about the bears as well. Jefferies upgraded BPCL to a buy from underperform. They raised the target price to 890 from 415 rupees a share. They say BPCL offered the largest margin of safety. It was not only BPCL. They raised the target prices both for IOC and HPCL, and it was a big target hike that we saw in both these stocks as well. Morgan Stanley says a well-supplied oil market, hardware upgrades and refining gold age driven by the next leg of earnings. Upgrades will keep OMCs higher, and that's why they prefer HPCL and BPCL as their top picks in the space, but they are overall very bullish here. JP Morgan says that consensus EPS estimates for FY24 remain too low, and that's why they're bullish in terms of valuations as well. They have raised the target price across the board for all the three oil marketing companies. They have an overweight on BPCL and IOC and neutral on HPCL. Now let's talk about the bears. For instance, CLSA, they downgraded the stocks in January, and now they reiterated it. They say a cut in retail prices of diesel or petrol looks less likely now, but if there's a 5 to 7% increase in Brent prices, it will cause worries over marketing margins. Nuvama today downgraded these stocks to a sell. They say they are structurally disadvantaged, and yet the stocks have rallied. So if they've downgraded all the three stocks, they've maintained the target prices. However, they say potential returns from here on could be under threat.
All right, Sonal, thanks very much for that. So, I mean, lots of broker commentary coming through on, the OMCs. But you've got the Nifty, which is starting at about 22,200. We're about 40 points higher on the sensex and about 5 points higher on the Nifty at this point in time. But I think we can straight away look at what's moving, and I think we should sort of pay attention to what's moving, which is Shriram Finance. I think the stock should come up on your screen without sort of any delay. It's starting about 1.5% higher. So it's not a sort of big reversal as the pre-open initially was indicating, but it is higher nevertheless. Look at Vedanta, which is coming up with about a 2.5% pop. That's the other one that we've been talking about since the morning. Nigel has been highlighting it. You got more names like Mazgaon Dock, which are starting about 4% higher. Straight off the bat, CMS Info is another name that we highlighted with a 4% gain. And there are names like Cochin Shipyard, which are up about 3% or so as well. So it's a pretty vibrant screen which is coming through. And the big reaction, of course, I mean, it's not a big reaction stock-wise, but significant news, and the reaction is on your screen. 3% lower on Vodafone Idea. So Indus Tower is the other one, which is down about 1%. These are the two largest volume-traded stocks which are coming through. There was, of course, negative news flow for Patanjali as well, and Patanjali is down about 3.5%, 1570 or so coming through there at this point in time. But 7 points, so it's a quiet start as far as the Nifty is concerned. And I think we've got the Bank Nifty, which is starting in a quietish kind of way, 0.15%. That is about 68 points in the green, guys.
Absolutely. On Patanjali, just worth keeping in mind that is a different company. Though, of course, it has a sentiment impact on the listed entity as well.
Company,
Same group, yeah. But the court issues are with the entity that produces those medicines. And that's where the statements came in from the Apex Court. Back to the large cap screen, Bharti Airtel is reacting really well. So the commentary coming in from Mr. Mittal himself, that seems to be rubbing off well on the stock. About focusing on the core business, turning into a digital entity, focusing on payments. The market likes the sound of that. Tata Consumer is showing up some green, 0.5% up, Hindalco, but it's getting very, very quiet on the Nifty otherwise. Tata Consumer, HUL, two names from the FMCG space that I can spot. Little bit of a, can't even call it buying. SBI has got a marginal green tinge. Infosys, but it's just, Nifty slips into red because I can't spot any of the winners on the upside. So let's look at the losers. What is pulling the index down this morning? There's some selling in a couple of auto names like M&M and Bajaj Auto. TCS is reversing some of its gain from yesterday. You have Apollo Hospitals, that is the weakest stock on the Nifty, down 1.5%. So again, it's not very clear in terms of trends. Little all over the place, but blinking green and red. Very quiet start. And frankly, quite directionless as we look at the morning.
Well, that's right. A few big volume movers today. BGR Energy, that's coming as one of the top volume movers on the downside. That's down close to around 8% as we speak. Jaiprakash Associates as well is slam dunk. It's down close to around 5%, and I think it's in lower circuit as we speak. India Bulls Real Estate, that's the other stock that has been moving quite well, but today it's one of the top volume buzzers on the downside. On the flip side, let's see stocks that are doing well. CMS Info Systems, well, that one is moving up in style. A lot of big investors coming in there. And now that overhang, I recall a year or so ago, the promoter entity had close to around, 40-45% stake. And gradually that's coming down. And in fact, now the P is totally out. So that's why that stock has bounced up. Kochi Shipyard is another one that's up 3.5%. And Railtel, wow, that one's moving pretty well. Vedanta as well. The market likes what, the management had to say. Delivery is going to be crucial, but for now, the street has given a thumbs up. So, flattish to mildly positive start is what we can see.
No, absolutely. But the market breadth is pretty positive. So let's hope that stays like that. Yesterday, by the way, while the Nifty did well, the mid and the small cap indices took it really slow. There was not very much which happened there. We've got 1,300 stocks which are higher, and you've got just about 600 stocks which are lower in trade. Just a few more names before we kind of welcome in our market master today. PB Fintech has had a pretty good week so far. I think it's up about, for the week, PB Fintech is up 13%, including today's 2% odd pop. So this is, just the third day into the week and 13%, not bad at all. Of course, the big move happened on Monday. CDSL is up about 2.5%. A few other names which we have not mentioned, 1960 or so. There is KEC, which is up about 4.5%. It's coming at about 729. KNR Construction is coming with a 2% pop. Chennai Petro. Now these names are, they move big. Chennai Petro is up about 4%. I can't spot MRPL anywhere yet. Torrent Power is up about 2%. 1174 on Torrent Power. And look at something like Dreamfolks. Dreamfolks is up 6% at this point in time. Gensol Engineering, that huge outperformer, 4% higher on Gensol at this stage. So this is, a bit more as far as a color on the broader market gainers list is concerned. And by the way, on the downside, now Union Bank is the top volume-led loser with a 3% knock. It's at about 142 on Union Bank. And Varun Beverages is coming up with pretty sharp volumes. It's down just under 2%, but volumes are picking up on Varun Beverages as well. And Paytm is showing some red after, I think, over the last 4 or 5 days, it's kind of seen green in a significant way. It's bounced 100 odd rupees from the lows. It's starting, I think, about 1.8, 1.9% lower. So maybe a little bit of profit booking here. There is Thermax, which is down 2%. And there is New India Assurance and a few others which are down as well. I think we have Gautam Shah with us. He's founder and chief strategist at Goldilocks Premium Research. Gautam, great to have you with us here on the program. Appreciate your time. Thanks very much. How's the market looking to you, Gautam? This is just the markets, I guess, climb a wall of worry, and that's what they've been doing. A lot of people, and not just sort of market participants, but because everyone is, of course, fixated with what's happening in the market. I've heard corporates asking the question, is the market's due for a pullback, right? Because many can't. I mean, I'm sure you heard what the Whirlpool global CEO sort of explained, how he explained the decision to sell some stake here in India. Corporates, and it is not just Whirlpool, but we've heard it from so many that maybe we're due for a pullback. With the market, it does the opposite. What your sense from here, Gautam?
Good morning, Prashant. Well, logically, markets top out on greed and not fear. And I think there has been a lot of concern and fear consistently in the last 6 to 8 weeks. Just because a market is stalling doesn't mean that it's stopping. I think the bigger concern for a lot of people is that the Nifty has gone nowhere in the last 6 weeks. We started the year at 21,700, and as we speak, we are at 22,200. So actually 7 weeks have passed, and the Nifty has actually just appreciated 2%. In this very period, the market has seen a brilliant rotational internal correction, because if you look at the breadth data, only 60% of the stocks in the NSE 500 are trading above the 50-day moving average. So it just goes to show that what was overbought, what had to correct has already corrected, but it's really not reflecting on the price action and the headline indices. I think the setup is still quite solid. We are past earnings, we are past all other global developments, and I do believe that the market can build up on the gains. And this last 6 weeks is actually a nice consolidation or a higher platform for greater upside. So till we are above levels of 21,870 and 21,500, which I think are important supports, I think the trajectory is still up. The pace is still questionable. I don't think the market is going to run away from here, because you're looking at numbers of 22,500, 22,800. But as I've been maintaining all along, this is a market where you need to be in the right sectors and right themes. And till the market trajectory is up, I think there is more upside. And also from a valuations perspective, there is so much talk about markets being overvalued. I mean, at a 22 half PE on the Nifty and at a 24 PE on the NSE 500 index, there is no way that this market is overly valued.
Okay, that's saying it as you see it. Quite emphatic there, Gautam. Hi. Good morning. It's true, when the money comes in, all the valuation talk for that time at least gets pushed to the side of the table. We've seen that, right? So since you believe that the trend is still up, the question is on leadership, right? And the last couple of weeks, we don't have any clear answers. It's not banks. IT looks like it's the leader one day, then there's pharma. There's just too much rotation going on. Are you able to pick any trends in terms of what or who will take this market higher from here?
Well, I think it's been pretty clear that Reliance Industries, which is the big boy and the big heavyweight in the Nifty, has been super strong, and it's at the doors of the levels of 3,000. So that's been one stock that's kept the market higher. And the IT index, despite the range-bound activity of the last 10-15 days, it continues to be super strong. In fact, it's at the doors of the lifetime highs of 39,400. So I do believe that the leadership will come from the IT index and from Reliance Industries, where I'm looking at significant upside even from current levels. And if both these segments of the Nifty do well, which is our view, then I think the market should be safe. Even the bank Nifty, I think we've come to a point where HDFC Bank seems to have stabilized around the level of 1400, which is great. And the chances of some pullback in HDFC Bank is pretty high. If that happens, obviously it impacts the Nifty and the bank Nifty. So till the bank Nifty is above 46,000, I think the chances of the bank Nifty actually moving towards the previous high of 48,500 is pretty high. So there are many heavyweights that are actually batting for the bulls. On the other hand, I can't give you 5, 6, 7 names that can actually pull the market down.
No, absolutely. So just since you mentioned HDFC Bank, take your point on Reliance entirely. It's been the most solid stock for the index. Since you mentioned HDFC Bank, I know we don't get into individual stocks, but do you see sort of the downside ending, or do you see an upside building up over here? I mean, a lot of people are wondering whether this is the time to take that big long trade on HDFC Bank, but they've just had to wait by, and it's not coming, that long trade.
Well, I think it's quite irrelevant. To be honest, there are much better opportunities in the market. It's just that HDFC Bank is the biggest stock in the market, and therefore everyone's invested big time and to the brim, and that's probably the reason everyone's interested in it. But for us, I think SBI has been the trade of the year, and I think we continue to believe that SBI can actually move towards a level of 1,000 at some point of time this year. So given that kind of a massive move that we expect, I think HDFC Bank will broadly remain in a range, 1380 on the downside, 1550, 1570 on the upside. It's really not going to do much. So in today's market, opportunity cost is huge. So you don't want to really get into stocks like HDFC Bank when there is so much happening and there is no real momentum on the upside.
Okay, all right. Hi Gautam, good morning. Good to see you in. Reliance, that's been the big outperformer. What are the levels you're looking at on Reliance Industries?
Well, Reliance is coming out of 1.5 years of consolidation. So I think longer the consolidation, the bigger the breakout, as they say in technical analysis. And I think it's held down to that level of 2750 really well. I think 3,000 is a psychological number. Once the stock gets there, the market will celebrate it. And I think once past 3,000, you could easily see another 10 to 15% upside, which will obviously have a huge bearing on the entire market. So I think Reliance single-handedly can actually keep the market firm. And if you look at charts of Reliance versus HDFC Bank or Reliance versus the Nifty, you will see that the ratio charts are all picking up. So it's possibly a phase for the next 3, 6, 12 months where Reliance outperforms the entire market.
Got it. PSUs, Gautam, again, it's not a homogeneous group, but everything with the PSU tag to it is done very well. So here, are there any trades to take from here?
There are selective trades, Prashant. The problem with PSUs are that they are overbought, but they're not overvalued. Because all of these stocks started doing well when they were at 5, 6, 7 PE, and now they are pretty much 10, 12, 13 PE. So they're not expensive by any imagination. It's just that they have run up so much that there is this concern that will they correct? But I think even in the PSU space, if you are in the right pocket, say some of the top PSU banks, SBI, BOB, Canara Bank, some of the metal PSU names like Nalco and SAIL, I think you should be safe. Even names like NTPC and ONGC, I do see them as structural stories and continue to do well. So you can't buy anything and everything in PSU anymore, and there is definitely room for some correction in the stocks that have run up very big in the last 6 months. But there are certain pockets which I highlighted where I think the opportunity is immense even now.
Okay. Asking you a bit of a out of syllabus question. The stock on mind is Vodafone Idea. I'm not asking you to predict levels here, Gautam, but I mean, technical analysis tells us that prices always move before the event happens, right? And people are trying to figure out if there's something changing, if there's a bottom that's being formed, if there's a turnaround in the works. But broadly on Telecom, if not on Vodafone Idea, any thoughts here? We've already discussed Reliance, but Bharti, and if indeed you're seeing any sign of life in the charts on a stock like Vodafone Idea?
Not really, Surabhi. At Goldilocks, we like to stay with grade A. And I think for the last couple of years, Bharti has been our top pick in telecom. It's done exceedingly well. And I think there is a lot more money to be made in Bharti. And now with Reliance joining the party, I don't think I need to really go one notch lower. So I would love to just stay with Bharti and Reliance if I want to play telecom.
Okay, all right. Gautam, what about any levels on the mid-cap, the small-cap indices that you're looking at? That's been the party, right? From March 2023 till date, one will look at the Nifty and say, wow, the index has done so well. But if you look at the mid-cap and the small-cap indices, you'll say, well, I wasn't really at the party. That's, blazing all cylinders. Any levels on the mid-cap and the small-cap indices?
Honestly, mid-caps and small-caps are beyond levels because, every single level in the last 6 months have been cleared. The mid-cap, small-cap index has been range-bound in the recent past. I mean, you could see the mid-cap index move towards a 52,000, which is entirely doable. But I don't think it's really reflecting in what's happening in selective stocks. there are two forms of correction in the market. One correction is when it actually falls, and the other correction is when the index turns sideways or range bound. So in the last 6 to 8 weeks, the mid cap and small cap indices have just been range. I think there are very limited opportunities, so you cannot really look at the index and say that the market is up. I think auto ancillary, power, infrastructure, unlock stocks, I think these are pockets where we are more keen on, and and therefore don't look at the headline indices too much.
Okay, individual stocks that catch your eye. Gautam, what are global markets, particularly US markets, telling you? What's the yield telling you? Because the 10 years back at 4.3, there's been a dramatic, of course, Nvidia-led rally, all-time high for the indices. But now even, Wall Street has gone into a bit of a pause zone. What are the indications you're picking up there?
Well, I've been a firm believer that India and US have moved hand in hand all along. In fact, if you look at the data since March 2020, our move and the move of the S&P 500 has pretty much been hand in hand. And I think this is going to continue. So when you have strong global markets, I mean, look at European markets, they are all at lifetime highs. Look at US market indices, they're all doing well. And we've had a series of higher tops and higher bottoms. And I still do not see any signs of topping out in the US indices. In fact, the Russell 2000 is coming back very strongly. The NASDAQ still looks good for another 7 to 8%. And the top 7 stocks in the NASDAQ and in the US are still super strong. I mean, look at Amazon, look at Microsoft, Nvidia, all doing well. So the point is, when you have a positive US market setup, which is still the case, I don't think the Indian market setup can get derailed. And with almost 19,000 crores domestic money coming into the system every month, you need something completely out of the box to derail this market, and therefore it looks difficult.
All right. Gautam, thanks very much for joining us. It's a pleasure having you with us here and getting that perspective from you. I think the market's down, 7 or 8 points. So this is as quiet, Surbi, as it comes. Market breadth is still positive, but the gap has narrowed down quite a bit. I mean, 1,200 stocks are higher and about 950 stocks are lower.
Yeah, I guess it's all about individual stock action. Mazgaon, for instance, is now tracking a 5% gain. There is a, Shipping Corporation of India. So, by the way, there's PSU rally, even stocks like MMTC, Hindustan Rectifiers, quite a few, STC, a lot of these government-owned stocks, they're once again popping up on the screen. But the stock that we are going to focus on, the company that we are going to focus on now is KEC International. The company held a conference call recently and it gave out its FY24 order inflow guidance at 20,000 crores. And as of February, the company's order inflow stands at around 14,000 crores. So let's talk about the business outlook, the momentum, and what lies ahead. We have Vimal Kejriwal, Managing Director and CEO at KEC International, with us. Mr. Kejriwal, always good to have you on the show. Thanks for joining in. So tell us, as we're entering the last leg of this fiscal, what is the momentum looking like across your business verticals? Because you are a little short of that target of 20,000 that you had put out, but you're confident of achieving it. And if so, tell us where the thrust will come in terms of fresh orders, as we're looking at now, the last month of the fiscal year?
So, Surbi, you're right. We are actually significantly short of order intake target. We are at 20,000, we are at 14. But we have roughly L1s of 7,000 crores, of which more than, I think, 2,000 and odd are with Power Grid, and there are some other domestic players. And then there are a lot of L1s in the civil. We are reasonably confident that most of them, or virtually all of them, should get converted, and we should be able to, achieve our target of 20,000 crores.
I remember Mr. Kejriwal and the guidance. I mean, have things slowed down a little bit in terms of how they're coming along? Good morning, sir. Prashant here. Because I think back in September, we discussed intake of close to 25,000 crores. And then, of course, the last was about 20,000 crores. And now, as you're saying, you're short, but L1s should convert. Most of them should convert, as you say. But is there a general slowdown, a trend that you're seeing at all?
So, morning, Prashant. I think what has happened is, you're right, we were at 22, 23, not 25, but 25 was a very optimistic figure. We had thought we should be able to do it. A few things have changed. I think one is somewhere looking at what's happening in the railways, we have also slowed down a little bit of a focus on railways. Second is private capex has not yet picked up. We had thought we'll get a lot more orders from the private side. So that's something which has a bit slowed down. Thirdly, what has happened is that we also took a stock of our order book and also our cash flows. It's been a little bit of a concern saying what is the debt level and all. So we also started becoming a lot more choosy on the order intake. See, today we have an order book of around 31,000 and 7,000 crores of L1, which takes us to around 38,000. We should be touching a revenue of around 20,000 this year, and maybe let's assume a 15% growth, so 23,000 next year. So we are reasonably okay with our order book for next year's revenue also, and that's why we also started becoming a lot more, I'll say, quality conscious in our order intake, and that has also had a marginal impact on our order intake in L1.
Okay. Mr. Kejriwal, you said slowed down the focus on railways a little bit. Can you explain that?
So railways, what has happened is that we are seeing a significant delay in implementation of many of the infrastructure projects, and also a little bit of cash flow issues for whatever reason. So because of that, I think we have gone a bit slow. And I think what is also seen is that the railway focus right now has been more on new trains, station rebuilding, etc. And the number of on the infra side, that's new tracks, and all that has been slightly lower. The second piece is the competitive intensity has increased significantly because I think there are lesser tenders in roads. So most of the road EPC players have moved into railways, so which is impacting the margins of the new tender. So I think we have become a bit cautious on the railway side.
Okay, all right. Hi, Mr. Kejriwal. Good morning. So we've got a broad outlook in terms of revenue growth, in terms of order inflow, and you're optimistic that you'll get to that number. Let's talk about margins and the working capital days. The last time we chatted, you were telling us that you're expecting margins to gradually improve. I think you're guiding for around 7% for Q4. And gradually it'll move to double digits. So could you tell us by when does it move to double digits? I think 10% we were talking about in FY26. Do you think it can get sooner? And what about working capital days? Give us a broad guidance.
So Nigel, if you look at the numbers, our Q3 margins for 160 basis points, year on year above. We have been talking about 7. I don't think we'll be able to reach 7, maybe a little bit lower than 7. We should be, for the year, should be around 6.5. I think that the major reason is there is some slowdown in terms of our revenue because of the major issue is the supply chain and the Red Sea issue. So we have slowed down on some of our supplies to Europe and to Saudi, etc., because the freight rates have gone up like anything, and we don't need to necessarily do that supply right now. So maybe that part will probably move into Q1 next year. And since those are largely the new orders and they have a higher margin, there may be a marginal impact on the margins for the quarter, but I think that will make up. Next year, we have been talking about, for the year, doing anywhere between 7.5 to 8% with an exit of close to double digit next year end. I think that's the numbers which we are going out on the margins. And as far as working capital is concerned, I think we did show a reduction in Q3, and we are very confident that again in Q4, we'll probably bring down a debt by around 300 or maybe 500 crores is our internal target, and could bring down the debt by 500 crores. So I think we are moving in the right direction on the margin as well as on the debt reduction.
Okay, so just a word on how you plan to reach that level of 7.5%. What will be the kicker? Will it be the mix that changes? Or will it be something else, some of the supply chain issues going away in the international business? And a word on the top line as well, sir, because you're confident that you should end the year with a 20,000 crore rupee order book target. Now, in terms of revenue growth, FY24 looking at 25, what's the top line growth estimation that one can work with when it comes to executing the order book?
So FY25, our top line target is around 23,000. So we are expecting that we will close the year at around 20,000 this year, and there will be another 15% growth for next year. That's the way we look at the top line. As far as the margin improvement is concerned, I think the new orders are coming at a decent margin. And also the major reason for this increase is going to be the closure of the legacy orders. We have been able to close most of the legacy orders. Whatever else are there, maybe this quarter, maybe at the most Q1 next year, we should be out of all the low margin orders. So the major reason is going to be the closure of old orders and execution of new orders.
No, absolutely. So I remember you mentioned this in an interview to us even in December 23 that your newer orders apparently are coming at margins of as high as 10%, if not more. Are these in the T&D segment? Is that the major margin accretive segment for you?
Most of it is in the T&D sector. In fact, if you look at our, we don't give out those many numbers. But if you look at our T&D India order intake plus L1 this year, FY24, we should be higher than 6,000 crores. I don't think we have ever seen order intake of 6,000 crores plus in the India T&D. And beyond that, I think we have around 30,000 crores of tender pipeline, either quoted or to be quoted in India. So I think that's one of the major reasons for our confidence on the numbers, across revenue or margins.
The fresh lines to be put up, Mr. Kejriwal, because I remember asking you this on the T&D side, and you said that, at that point, 6 or 7 months back, that it's not new lines but existing lines to be put together and made good again. But these are new lines. It's a large pipeline.
So, Prashant, these are two different issues. One is, there were many plants which were operating at 50-60%, and with the PLF factor and with the power shortages happening, I think most of these plants were pushed. So that's where we got involved in strengthening. But all these are majorly new lines, and I'll say almost 90% or maybe even 100% are for offtake of renewables from Rajasthan and Gujarat. Two states where we are having the maximum work, and I think a little bit happening in the Karnataka side also. But largely, I'll say 90% of our order book is right now from Rajasthan and Gujarat for renewables.
Okay, got it. And you're saying that tenders and visibility of tenders in that segment is about 30,000 crores, right? Already projects put together, and where there's more so both of that 30,000 crores, which should get awarded out in the next. And any visibility of how much? What would your take be out of this number?
So, Prashant, I think we'll have to keep our fingers crossed, because I think the day the elections and all get announced, if some of them get finalized before that, we should have them now. Otherwise, I think we'll have to wait for end of May or something. But most of these are already announced, tendered, so we are keeping our fingers crossed. And I think I've been watching our channel for the last 2-3 days. We have been seeing, so many of our competitors, vendors are getting orders from Power Grid. So I do see that, there is some fast tracking of release of orders.
Okay, got it. And I mean, once the sort of model code of conduct kicks in, formal government tendering work will stop. And then, of course, restart later. We'll see. But great conversation. Sorry. Yes.
Sorry, one more point on this model code of conduct. What we have also seen many times is if the projects are critical, the utilities and all have been going to the Election Commission and taking approvals to issue orders. So it's not that it stops completely. If it's urgent, they can still get approvals if they want to do it. Okay.
Oh, wonderful. The way it should be. Thank you very much, Mr. Kejriwal. Great conversation, and I think you really provide a sort of very nice sort of view of what's happening in each of these sort of businesses and a bird's eye perspective, which is very useful. Thank you very much for joining us.
Thanks for having me.
With the conversation. All right. So that's KEC International stock, by the way, has jumped up to the day's high. It's up about 4.5% as things stand right now. We are up 13 points, so it's still flattish, but up a little bit, 22,200 plus. We'll take a break here. We are back, and we'll be joined by Mr. S.K. Jha, Chairman and Managing Director at Mishra Dhatu Nigam, to discuss their business outlook, plans going forward. Stay with us.
Welcome back. Well, let's focus on Mishra Dhatu Nigam. Well, the stock in the last 1 year or so, it's been a big outperformer. The stock is close to have doubled. However, in the last 1 month or so, the stock has got a little bit nervous. From early February, last 12 months, beautiful. Last 1 month, the stock has come down, I think, close to around 20% from its recent high. But to understand what's the way ahead, well, and to help us out with what's the current positioning of the order book, we're joined by Dr. Jha, the Chairman and Managing Director of the company. Hi, sir. Morning, and good to see you, and thanks so much for joining in. Well, let's focus first on execution. We've got your rough order book, and we could get an updated number. But at the start of the year, I recall you telling us that you're expecting to grow by close to around 20% in FY24. As of the 9 months, well, you have done more than that. You've done close to around 27%. But you also said you expected margins to go closer to around that 30% odd mark. In the last quarter, there was a dip. For the year, what is the average margins? And what is the revenue growth we should look at both in this year as well as in FY25? Please go ahead, sir.
Yeah, first of all, this year we have a very big change in our the business areas. Mainly because now we are mostly serving the high-end materials, that is of nickel-based alloys, which requires a lot of other valuable metals like molybdenum, cobalt, niobium, and other precious metals. And these prices are fluctuating in the international market. I think the main reason on pressure on our profit is because of variation in the raw material prices. However, recently I have seen in the last 3 months it has come down. It is getting stabilized. I think this will have the impact we'll see in the Q4 or maybe in the first quarter of the next financial year. Both will have the impact. We'll have the better improvement in our margin because of that.
Okay.
Regarding the growth, as you have already told that we have already crossed almost more than 25% if you see the last 9-month operations. And of course, Q4 has been always good for the company. So I expect that we'll be maintaining the similar level of growth in the revenue and in terms of the value of production also. Regarding,
Yes, sir. So Mr. Jha, I just wanted some more clarity. So this year you'll end closer to around 1,100 crores of revenues?
We are targeting 1,100 crores.
1,100 crores
this year. And
on that base, you will grow another 20%. So you'll be closer to around that 1,350 crores approximately for the next year.
True.
Got it. And what about the margin outlook? The worst is behind. You're saying the raw material cost has cooled off, so margins will improve from here on. On an average, what should the range we should work with?
If you see now, the margin which we are operating in the last 9 months, if you see, there is a lot of pressure in the margin, but I see the last quarter will have the better realization of that profit because the whatever raw material we have consumed so far, I think those things are only going to give the output in the next another 1 month left now for the completing this financial year. So I am sure that will have the better performance, but then definitely it is not going to go near about 30 or 30 plus. I am just saying that it will be in the range of 20 to 25%. In that range only the margin will be there overall for this year, current financial year.
All right, 20 to 20. Sorry, go on, please, sir.
And why it is so? Because mainly now we are serving the high-end materials for the aerospace industry, and aerospace industry requires mostly the nickel-based alloys, then titanium alloys. And you know that the raw material prices across the globe, it has gone up, and supply chain also got affected. So because of that only this is coming, but I think we are in a position to stabilize it further as we progress.
Mr. Jha, hi, good morning. Prashant here. Could you tell us, just talk to us a little bit about the order book and what is really the scope of the orders? You know, it's a sector which is taking off. The government was the primary sort of player in the field. There are so many sort of private entities which are coming up really fast. There is the recent FDI news. What is the sort of size of the market as you see it for you? Sir, how do you scope it?
As I have told earlier that we are targeting more than 25%, 20-25% growth year after year. So definitely our order book also has to grow in similar way. And if you see today, we are almost crossed almost 1,700 crores plus. We have the order book position. But there are good indications. I think this year we are almost finishing the total order booking will be by the last quarter. It will be coming to almost 1,500 crores for this year itself order booking. So and it is not only that order is not available. Many orders we are not able to take as on today because of capacity constraints, and also the supply time is very less for the mostly for the overseas companies, because now they are approaching to us, and for that matter other companies in India also to get the raw material at the very in the very less time. So that part we have to address now, and I am sure that we have also addressed it. That's why this year our export is also going to touch the maximum level, and I am expecting that this will further grow in the next year because a lot of indications, positive indications are there, and we are interacting with the many leading aerospace companies of the world, and I am sure that will further give us the advantage for whatever we have.
Sir. Absolutely, and the company always comes into the limelight when we have these high-profile space missions, especially. And just yesterday, when we had the 4 astronaut names get announced for the Gaganyaan mission as well, so extremely prestigious projects, all of these. But can you give us a mix between the space and the defense revenue? And is there any difference in margins, or are margins pretty similar across both the businesses? Because you're saying 20-25% EBITDA margin for the next year, by the end of this year. What should we expect on the margin profile, and what will be the revenue mix in this 1,100 odd crores for FY24?
Yeah, in FY24, we'll be almost doing the defense will be the maximum. We'll be completing defense with almost 60 to 65% defense supply will be there. And space will be around 25%, and the balance will be the rest. What happened in the space, whatever orders we have received 2-3 years back, already we are completing we have completed 90% out of that. So unless we get the new orders coming from because now the space is going for the transformation that they are going to go outsource, and also the many private players are coming into the picture. So those things, the finalization of the contract is taking some time. So definitely, once this get finalized, then we'll be also going to the fray to get the orders from that type of consortium. But I have seen that now that change, that also if it is coming to the place, the margin which we are operating today, probably we have to also be in the competitive mode where many, as you rightly told, that many companies are also coming in this area. So definitely there is a pressure on the margin because we cannot operate on the higher margin for that also. What we have to see that we have, with our enhanced capacity, we have to increase the volume, and we have to also see the cater the requirement of the defense, especially in the aerospace sectors, for the Indian requirement and the foreign requirements also. So this is the combination where we have to work and then see that how we can best maintain our margin the best possible way. But definitely it is a very challenging market, very competitive market. But since Midhani is having a special, unique, placed in this sector, so definitely we'll have the advantage in getting the new orders coming from the different sources.
Got it. Good sector, but it's getting competitive. We got that. Mr. Jha, final question before we let you go. You're talking about capacity constraints, but also you had some kind of, I think, debottlenecking, some capacity coming on stream. So at peak capacity, with your current gross block, what kind of revenues can you do? Point number 1. And point number 2, we normally ask you about this. Have you heard something from DIPAM? Is there going to be an OFS in Midhani in the next 1 month or so? Because FY24 we were talking about, it's almost the end.
First, I'll address on the capacity wise. We are a continuous, means like a plan to enhance our capacity both on the upstream and downstream. That is regularly we are doing. So that is giving us the advantage for the getting the bigger volume from the market, from our sales. And also for regarding the OFS, in fact, the DIPAM is the right agency to comment on this, but we are already, this was indicated long back, they will go for OFS, but now I think they are likely to finish maybe in the 1 year, but I have not heard a concrete plan so far from the DIPAM as of now.
Okay, all right, Mr. Jha, we'll leave it on that note. Thank you very much for sharing all the details on the business with us. Good chatting with you this morning, and all the best for your plans.
So we just one thing, Mr. Jha was talking
Prashant
about...
is here, he's not going off to space.
I mean, for those who don't know, Gaganyaan, one of the astronauts, right? The first sort of manned mission, right? Is Prashant Nair.
Yes. Oh, I didn't realize the surname as well was now.
So in the evening, I think I got lots of messages and saying...
All the best, congratulations.
And if you didn't check your phone, you'll be wondering, because people are saying, Prashant's going to space. So I said, no, he's in the studio tomorrow. So they're like, oh, okay.
Very glad to have this Prashant Nair right next to us.
From space. But I mean, it's an incredible moment in that sense, of course, for the astronauts. And so that's really something to be proud of. And we wish, the team all the best. as they embark on that mission. So that's what we're looking at. 10 points lower on the Nifty. Let's focus on an exclusive conversation now. This is Jesper Brodin, CEO of IKEA, saying that they will decide on the next phase of India investment before the end of 2024. In a conversation with my colleague Shireen Ban, Mr. Brodin talks about the upcoming stores in India and, of course, the investment plans here going forward. Listen in.
Let's talk about the view on India. And I know you have, of course, been long-term committed investors to India, but you also need to have a lot of patience, as you keep saying, to stay committed and invested in India. You've just returned from visiting your Gurgaon facility, which is still in the works. It's work in progress. What's the status on that?
The status is, it looks good. We are basically deep in construction right now. And the IKEA store will be, as quite often these days, not only an IKEA store, it's going to be a shopping center, and there will be some other facilities as well. So that means it's a quite complicated and big project for us. But as we are in IKEA, we try to think long term. We try to think about not just being here for the short term when it comes to driving our business, but actually establish ourselves for decades and a long period ahead. And I can tell you a fun story, actually. One of the last times I met our founder, who passed away a few years ago, as an old successful entrepreneur, I asked him about the future, and I asked him, how should we think about the future, Ingvar? He said, you should think long term. And then I asked him, how long term? And he said, yeah, 200 years, he said. But I can promise you, we're going to open Delhi before 200 years.
Well, I would certainly hope so. But, so you've got Gurgaon coming up. Noida still a couple of years away from being ready for operation. And Delhi, no plans yet?
So basically, in the Greater Delhi, we are looking at actually doing what we have rarely done before. We're going to open online first. So we are deep in preparations now for logistics, digital capacity to actually open our online experience first. And then the store will come in maybe 1.5 years or thereabouts, I think. And as we then progress with Noida, we're looking into other sites and opportunities in Delhi. To this date, we don't have more to share, but I think my team will probably be able to respond to you before I meet you in the snow next time.
So by 2030, because we're talking long term, not 200 years, but a couple of years out, how large is the IKEA presence likely to be in India?
Well, it is what we are basically working with right now. The first chapter for us was to build the first store, which has, as you know, opened some 5.5 years ago in Hyderabad. That was to prove to ourselves we could, and that there was a market and there was an interest. And you can say the experience has been phenomenal for us. The interest is massive. After that, we opened in Mumbai, Bengaluru, and now Delhi is on the map. But the long-term plan for us is to establish IKEA in all big cities and then expand in an omni-channel context in India so we can reach as many people as possible. We are, you can say, on one hand, we have to be a bit patient because building big IKEA stores takes a bit of time. Building industry capabilities for the volumes that IKEA is supporting is basically a game of not only supporting IKEA, but making sure there are entrepreneurs, investors. There is export as part of it, because in the beginning, we need to build volumes where we rely a bit on export before it can benefit the domestic market. Normally it takes a decade or thereabout to get all of these things in place. But we are truly, on the other hand, in a hurry to build those volumes so that we can reach more people and also work the economy of scale to bring even more affordability to people.
You talked about your big stores, but let's talk about the experiment with the small store. And you have decided now to close the R-City store in Mumbai and consolidate your operations. Explain to me why you felt the need to do that. Was it an experiment that didn't work out, obviously, as per your expectations? Are you giving up on the small store format plan? What's the story there?
The story is, so basically we have concluded that the small stores will be part of the IKEA concept as we see it. We started the project around 2018, I think, when we said we need to experiment not only with online services, but also how do we bring IKEA closer to the city centers. And the analysis wasn't that difficult to understand. A lot of people, limited capacity to move to the outskirts of the city. So we wanted to bring the physical experience to people in a smaller format then. We have done, I think we have done probably about 40, 50 of those. I think we might have closed some 10 of them. Typically, we learned that we need to be in prime location. We need to also build it in a certain flow so that it enables for people to find what they need to find. And the Mumbai store that we recently closed was one of those where we basically weren't in a hot spot enough. So I wouldn't say, you know, these smaller stores are quite, they are smaller decisions for us because, of course, the investments is very small compared to Noida and Gurugram. But I'm sure that we're going to continue to find ways also in India to establish smaller stores.
So you're not giving up on the small store strategy?
No. But I'm also open to test and try, which means also in the future we might say that didn't work. That's part of being an entrepreneur. So hopefully we will test and try many more things here. And part of that will be sometimes we have to give up and say that didn't work.
So by when do you think you'll be ready to make the announcement or be clear about the next leg of your investments?
So unfortunately, time is up now. No, I can promise you that my team will come back to you within this year, at least. And then I'm conservative to say, here are the new numbers that we are willing to share. Again, we have a couple of discussion points with officials and with representatives of governments to make sure that we gain enough confidence to say we are ready to take the next step of investment.
Is it likely to be the same number that you replicate or a higher given the experience that or the consumption story that you see?
I promise you it's a number you will like.
It's a number.
More than that I can't say.
Okay, but within 2024 is when you will make the decision about the next phase of investment.
We will do so.
All right, well, 10 points lower is what we have on the Nifty. We're at 22,190. Mitesh is with us on the program now with what he's making of the action so far. Mitesh, hi, good morning. 6 points lower is absolutely flat. Any trades you'd want viewers to put on?
Prashant, nothing on the index. I think, as I said, with the volatility indicators turning down, I think you might see the choppy consolidation kind of become slightly quieter. But broadly, it is still a market which is sideways. So trading should be more stock specific. I have a buy on Tata Consumer. I think, that's a stock which is breaking into fresh highs, showing good momentum. So keep a stop below levels of 1180 here and look for targets of 1245. And amongst the paid names, I think Berger is giving a fresh breakdown. So that's a sell with a stop at 567 for targets of 535.
Okay. All right. Thanks a lot for that, Mitesh. Well, let's focus on one stock, which is Shriram Finance. Now, year to date, the stock has done very, very well. It's been off the blocks in style. As we've been mentioning, fundamentally, it has some kind of support because valuation-wise, it's trading at around 1.5, 1.6 times price to book, and it's cheaper in comparison to its peers, and it's got some kind of cushion in terms of margins. That's the fundamental part. The second part that the street was waiting for is the technical part. And that was with regard to it coming into the Nifty. Let's give you a quick background now. The NSE Index Changes meeting is scheduled today as their Index Maintenance Subcommittee of NSE indices, well, they decide on the changes and they'll make an announcement on the changes post-market hours. The consensus expected Shriram Finance to come into the Nifty while UPL will move out. But from yesterday, suddenly the street is a little bit nervous on Shriram's Nifty inclusion. Why is that? Two broad factors. One is Zomato as well as Avenue Supermarts. Well, they are eligible as per the current criteria, but both are not F&O stocks. So that's one point why it's a little bit nervous. And the second factor is, in case there is any kind of significant methodology change in the computation of inclusion. So that's anyone's guess, in terms of what they could potentially do. So at current reckoning, going by the past data's performance, you take the market capitalization, Shriram Transport, well, it fits the bill. But if there is any kind of change in the methodology, that's what's making the street a little bit nervous. So post-market hours we'll know, but these are the two factors that are making the street a little bit nervous.
All right, Nigel, thanks very much. Interesting explanation in terms of what's happening there. We'll take a quick commercial break here. Manisha will put the focus on commodity markets when we come back in just a bit. All right, welcome back. We got the markets, which are absolutely flat, up a little bit now, 25 points or so. Let's shift attention to the commodity space. Manisha is here with what she's tracking today. Manisha, morning.
Morning, Prashant. I'm looking at copper because this is a commodity, and a Dr. Copper, as it's known, has been sold in the last 3 or 4 sessions. But we've seen some bargain buying happen on the lower side. This also is happening as the futures markets are higher ahead of the expiry, which is due today. Well, there also is funds short covering because we have been looking at very short positions being created by investment managers and funds in many of these metals, including copper. So there is some short covering as well happening there. All of this is happening ahead of the China PMI data. That is one thing that is awaited. And the other is the China National People Congress meeting. That's happening in this week as well. And the expectation that you could be looking at a long-term vision coming in for the property sector. You could also be looking at some stimulus measures coming in, some more pledges in sense of supporting the property sector, etc. And that is where the metal is taking some sense from. Also, when you look at the China copper ore and concentrate imports, that has gone up by nearly 20% versus the first quarter of 2021. This is before the property sector started to see a decline. Also, when you look at the inventories in Shanghai itself, that has gained up by 500% year to date right now. Of course, the inventories were on the lower side in the previous year. We were trading in a deficit when it came to copper for the last 3 years. So this is support coming in from very lower levels in sense of those numbers there. But there have been also very interesting statements coming in from the global banks and brokerages. To begin with, Goldman Sachs says that the largest immediate price boost in commodities would come in copper when the US rate cuts actually happen. They've actually put a number out at 6% of an immediate reaction on the higher side, as in when you start seeing those rate cuts come in. There also is a report from International Copper Study Group which says that the world mine production will increase by 3.7% in this year, but they expect the consumption to be much on the higher side. ANZ also came out with a report on copper saying that the demand growth in 2024 from US, China and India is anticipated 4.3% year-on-year for the year 2024. ANZ also puts the copper price estimates at around $9,000 this year and $10,000 in next 12 months. Currently, the copper prices are trading at an $8,400 per ton. There also is a report from Citi which says that the copper prices could reach $8,800 in the coming 3 months itself. So bullish cues coming in from the banks and brokerages as well. I quickly want to touch upon the copper smelter charges where we have seen those decline to decade lows. That is because the concentrate is easily available. There is more production. The contango seems to be getting deeper. So that tells you that immediate availability in sense of copper is on the higher side there. When you look at the spot treatment charges, they are at $19. It is 9% lower than previous year at $80 a ton. And we also are looking at these numbers at much lower than a 6-year highs that we saw in 2023 as well. So immediate availability is there. But going forward in the second half, the expectation is that the copper demand is going to be much on the higher side.
All right, Manisha, thanks very much for that. Well, we'll take a quick commercial break here. Our special segment, It's the Economy, comes up next with Lata. We'll get chatting with Nikhil Negania of Bernstein and Girish Kumar Kadam of ICRA. And they put the focus on the power space and discuss government raising the forecast for power demand over the next couple of years. Stay tuned.